Hi, I'm Lango, and this is Investor Place Quick Picks, where we communicate to you some of the market's best investment ideas in just 10 minutes.
America's leading innovation investor, Luke Lango's Investor Place Quick Picks.
Today, we're going to talk about your favorite streaming TV service and why its stock is a great buy on the recent plunge. The company, of course, is Netflix, ticker NFLX. Now, Netflix stock tanked last week after the streaming giant reported disappointing first quarter earnings, which ostensibly showed that the company's growth trajectory is materially slowing as the world normalizes and consumers go back outside. Now, that's a big fear on Wall Street, right? I mean, Netflix had this huge 2020 powered by COVID-19 tailwinds. As those tailwinds disappear in 2021, Netflix's growth trajectory could flatten out. And that's exactly what we are seeing play out so far this year. And it's spooking investors. So Netflix stock is tanking. But this tank is a buying opportunity because slow user growth is not here to stay. And by the second half of 2021, Netflix will be back to its old self of adding millions of new subs every month. Here's a deeper look. First, let's talk about the problem. The problem here is that Netflix is having trouble adding new subscribers. The platform added just shy of 4 million new subs in the first quarter of 2021, well short of the company's own forecast for 6 million paid net adds. Worse yet, Netflix is guiding for just 1 million paid net adds in the second quarter of 2021. That marks the company's lowest number of quarterly net adds in several years, and signals that indeed Netflix's user growth trajectory is slowing meaningfully in the first half of 2021. Now, based on the current trend, Netflix is on track to add the fewest number of new users this year since 2014, which is a big deal because this reverses a long track record of Netflix increasing the number of paid net adds every single year. In 2014, Netflix added 8.3 million new subs. In 2015, that number climbed over 16 million. Over the next 5 years, it went to 18 million, then 22 million, then 28 million for 2 straight years, and then a whopping 37 million in 2020. That trend is now breaking. Investors are spooked, Netflix stock is tanking. Okay, so this slowdown would matter if Netflix was getting crushed by the competition, but the data says that's just not happening. There are 2 important data points to look at here. First, Netflix's retention actually improved in the quarter. First quarter 2021 churn rates were below first quarter 2020 churn rates. So, folks aren't quitting Netflix for Disney Plus or HBO Max. They may be adopting those new services, sure, but they're sticking with Netflix. It's very important. Second, Netflix's user growth trajectory was on track through the first part of the first quarter of 2021, when the company had new hit releases like Bridgerton, Lupin, and Cobra Kai. Then, once those new releases dried up, Netflix's user growth trends plunged. In other words, the data strongly suggests that Netflix is having trouble adding new subscribers because of a light content slate, as the company hit the pause button on production in 2020, which is resulting in fewer early 2021 releases. Now this makes sense, right? New content attracts new subs. As that pipeline of new content has slowed, the pace of new sub additions has slowed too. Now the good news is that this is a fixable problem. Netflix is already re-upping content production as COVID-19 restrictions ease. The second half of 2021 will have huge content slate releases that includes new seasons of Sex Education, The Witcher, La Casa de Papel, and You, as well as films like Red Notice, which will star The Rock, Ryan Reynolds, and Gal Gadot, and Don't Look Up, which will star Leonardo DiCaprio, Jennifer Lawrence, Cate Blanchett, and Meryl Streep. Basically, While Netflix's first half 2021 content slate is weak and will result in weak sub growth, the company's second half 2021 content slate is about as good as I've ever seen and should result in near record user growth. Ultimately then, Netflix's net 2021 user growth number will be in line with historical numbers in the 20+ million new subs range. Netflix stock is tanking because of fears that weak user growth will persist. But it won't. It will dissipate by the second half of 2021 when the content slate recharges. When it does, Netflix stock will rebound in a big way since shares are meaningfully undervalued at current levels of below $500. Wall Street analysts and our team largely agree that Netflix stock is worth more than $600 today. We believe that while near-term weakness may last because of uncertainty around what the rest of the year will look like, that Netflix stock will ultimately end 2021 above $600. Well, that's all we have for this edition of Investor Place Quick Picks. I hope you liked what you saw. If you did, please subscribe, smash the like button, hit the notification bell, do whatever you want. We appreciate that you watched this. Hope to see you next time. Cheers and happy investing to all.